Hey everybody, this is Ryan Mallory. I'm going to talk to you about the 5 stocks to buy or short for the month of July. Volatility is picking up. The S&P 500 is not that far away from actually being red on the month. So guess what? There's a lot of people out there that are going to tell you to buy this stock and buy that stock, and you just can't follow that advice blindly. So what I'm going to do is I'm going to give you some trade setups here. I'm going to lay out the risk parameters. I'm going to show you where I think it can go, and I'm going to show you what I think the downside is, because guess what? This market could go straight down from here. It could also go straight back up to the all-time highs. Nobody knows for sure. But our job as traders, as investors, it's not to predict the stock market. It's to try and follow its lead, see where it wants to go. How do we respond to what the stock market's doing? When it's breaking out and moving higher, that's when you get long. When it's breaking down and it's pushing lower, that's when you get short. That's when you start raising cash. That's when you start trying to look for opportunities to buy when the market gets so low that the stocks are just irresistible. You want to have cash for those moments. And how do you do that? By managing the risk, by using stop losses. You, me, and everybody are going to be wrong in the stock market all the time. I'm wrong all the time, guys. It's okay to be wrong. What's not okay is to stay wrong. And that's the one thing I built my career on, is not staying wrong. If I'm wrong, I get out. I've had 2 trades in the past week. I got long on them and I quickly realized these trades are probably not going to work out well. One was Twitter, the other was Facebook. Basically came out with like fractional profits in it. I knew I was about to be wrong. I wasn't going to hold on to my pride and ego over the fact that that stock was about to tear me up. It did. I protected my profits. I protected the capital. And that's what you got to do as trading. You can't listen to all these blowhards out there that say stocks only go up. No, you can't do that, man. It's going to destroy you as a trader if you listen to these people that lead you down this path that nothing can go wrong, because it will go wrong and it'll destroy you in the process. So I'm going to rotate between long setups and short setups. So I'm going to do 3 long setups. I'm going to do 2 short setups. Again, I'm not trying to cover my butt here, okay, by saying that I could be wrong. I'm just trying to tell you what's obvious. As traders, we're going to be right and we're going to be wrong. I'm trying to give you the opportunities, trying to show you what to look for. If you don't approach trading from that standpoint, you're going to lose. So let's go ahead and get right down to it. The first one is AES. I actually really like this stock a lot. It's basically been trading inside of this sideways channel for a good while now, for 3 months almost. Now, I'm not sure if it's going to break out in the month of July or not, but the setup is there. Essentially, if it breaks above 1507, it'll be outside of this box pattern here. Once it does that, there's a lot of room for this thing to really take off. It could go as high as $20 here. So there's about a 33% upside if this thing does break out and follow through with the promise that I see in this particular chart. Profits are great, but you gotta have a stop loss, because at times the trades are not gonna go the way you want them to go. So what do? You have a stop loss. That's like your insurance policy to make sure you don't capitulate. If the market keeps going lower like it did today, guess what? You want a stop loss in place to prevent you from losing too much money. Now, where do I put my stop loss at? Unless the price dynamics of this chart changes to where there's a more tighter stop loss to use, I probably put my stop loss below 1311. That would be below the June 18th lows. What that does is that gives you about $2.50 of upside for every dollar of downside. That's pretty good. A reward ratio of 2.5 to 1, it's pretty solid. But you know, if it breaks below this level, that's where you're going to want to get out. Now, if it keeps going higher after the breakout and it starts getting into, like, say 16, 17, and 18, look to take a little bit of profits off the table. You can take half of your position off, you can take a third of a position, or if you want to really keep most of your position on, just take a quarter off. But take some profits along the way. Once it gets to 20, it's going to be at its February highs. That's probably where you're going to want to go ahead and get out of the trade and move on to a new opportunity. Now let's go for a short position here, and let's short the almighty mouse. Mickey Mouse, that is. DIS. Look at this thing. Lots of resistance overhead. It's been hitting the 200-day moving average. Can't break through it. It's formed a head and shoulders pattern here. So what do? We short it. It's broken the neckline. It's broken the trend line off of the March lows. It's broken some price support. There's all sorts of problems here. Plus, you take the COVID situation into account. Cases in Florida are spiking through the roof. And what does Disney rely on? They rely on massive crowds. There's a good possibility that they could have to shut down again. And what's that going to do? It's going to harm the stock. And you're starting to see that reflected in the price sum here in the early going. And now, as of today's close, it's trading below every single major moving average. It's very bearish across the board. So how do you trade this thing? Well, you got the head and shoulders pattern. It's breaking the neckline. So below 111.69, that's where you want to get short at. Now you got to remember, on the short side, and especially in this environment where you have a lot of Fed intervention, it doesn't take much for this market to bounce off of the rumors of a stimulus or increased Fed policy that it leads to more intervention into the financial markets. When that happens, it's going to cause these stocks to spike. So there is an additional risk that comes along with shorting a stock. But from a technical standpoint, this thing has bearish written all over it. There's 2 profit targets that I want you to look at. The first one, would be around $99.40. That would be the first one. That's probably where I would take a little bit off the table. If it continues to drop from there, then you have this other one around $92 flat. Maybe you take a little bit more off of there. If this market wants to continue to push lower, keeps pulling these stocks that are very susceptible to COVID outbreaks lower, then maybe you retest the March lows on DIS, and then that's probably where I would close out the whole position at and move on to another trade. Now, as for a stop loss on Disney, I'd probably put it above June 19th highs, which would be around $120.14 a share. That's where I put my stop loss at. Get short at 111.69 with potential downside somewhere between $80 and $92 a share. Ring Central, RNG. How about this one? Well, check out this ascending triangle pattern at the highs. Yes, it did sell off pretty hard today. It sold off about 4%, but it held that rising trend line off of the June lows. That's important there. Now, if we get additional selling tomorrow and this one continues to sell off with the market, it's probably going to break this charting pattern and it may not even be valid going forward. However, if it can hold it and it can break back up through the upper end of that ascending triangle pattern, guess what? You have a breakout pattern on your hands. Now, what I like about this one also is that you can actually have a decent risk reward on it. Now, on this particular stock, I would put my stop loss below the 50-day moving average. As you can see here, it has continuously held onto it every time it's been tested. That's not where you want to get in at unless you're looking for a pullback play and you're expecting it to bounce. But by doing so, you're hoping that it can get through that resistance level on the ascending triangle pattern. That's why I like waiting for the breakout to the upside to play out more, because then you have the confirmation that it's breaking out. So if it breaks above $290 a share, that's where I'd want to get long at, and then put my stop loss below the 50-day moving average, which is going to continue to go higher and higher as long as you stay in that trade, and it almost acts as a trailing stop loss of a key support level. That's kind of a cool thing there too. You're probably going to want to have around a price target of $350. That'll give you about a 2-to-1 return because you're going to be taking about $30 of downside risk on this trade. But to the upside, it's got about a 20% return potential. So $350 to the upside, $260 to the downside. That's where you want to get out at. Now, could you short this stock? Yeah, there's probably the potential there too. You probably want to reverse the parameters, but only instead of a 260 entry, I'd probably wait for it to break this neckline around 250 to get short. At that point, it's breaking some key support level going all the way back to February, and in doing so, it's almost giving you this like triple top pattern there. So there's the potential for this one to go either way. How about Merck? I've been watching this one for a while here. I like the double top pattern, and what's even better about this double top pattern is it's formed right on the 200-day moving average, so it can't break through it. That's pretty cool. Now, if you're looking for stop losses on it, I would probably say, hey, a break back above the 50 and 20-day moving averages would be enough to get me out of this trade. But check this out. You have a bear flag pattern. It's confirmed, and now it's pushing lower. This 75.43 level, it seemed to be like a key support level. That's where it went down to today before bouncing just a little bit. If it breaks below 75.43, that's where I want to get short at. You have your stop loss in the 79s. And then you have a price target back down at the March lows, which would be around 65. This stock hasn't done very well. It hasn't bounced well with the market at all. It hasn't bounced well with biotech and the potential cure for a vaccine. It's been very stagnant. It's a bearish pattern. This is a stock that I could only see getting short on. Now, for stock number 5, how about Roku? Look at this thing. It's a massive inverse head and shoulders pattern here. It's going back to last year, but it hasn't broken through it. Man, it keeps playing with it, but it can't break through it. And then you have another resistance level that goes all the way across to 150. It dates back to the September highs. So there's a lot going on in this chart. So where you want to get long on this stock would be around 131.50. If it can break through 131.50, there's a chance that it'll go to 150 before it ever hits any kind of resistance. Now, that resistance is going to be key. If you start seeing it struggle a little bit with that resistance level, that's probably where you want to go ahead and exit out your trade. As for stop losses, I would put my stop loss below 115.76. Barring any really bad news in the stock, that gives you a little bit of protection to the downside there. Ultimately, I think there's some potential for price action all the way up to 176. That's pretty cool there, because that would give you over 3-to-1 on the reward to risk ratio. That's the kind of trade setups that you're looking for. That's what you want to do. That would go back all the way to the August highs of last year. Now, again, there's a ton of risk in this market, guys. So you got to be cognizant of it, because guess what? A stock in most cases can only do what the market's willing to let it do. So if the market's rallying, that's the best conditions for a stock to go up with it. When the market's falling, that's going to put a lot of pressure on stocks to actually perform. That's why you want to start turning your attention to short setups when the market's falling. Otherwise, you're just fighting the trend, and you don't want to do that. So I've given you 5 setups today. I've given you AES, I've given you DIS, I've given you RNG, I've given you MRK, and now I've given you ROKU, Roku. I'd also encourage you to like and subscribe to my channel. Guys, I'm putting out these videos about twice a week here. I know some of you guys want me to do more. Man, I tell you what, as a trader, this is about all I can do. Maybe one day in the future I'll be able to get better at putting these videos together, editing them, and be able to do more en masse. But for now, I just ask that you like and subscribe. Keep helping this channel grow. I appreciate it. I appreciate the comments that you guys continuously put down below. And I invite you to tell me what your 5 stock trades are for the month of July. I want to know what they are. I might be able to get some good ideas off of you as well. Take care. God bless.